Simplicity is the outcome of technical subtlety. It is the goal, not the starting point. Maurice Saatchi. My friends, keep that in mind. Simplicity is the outcome of technical subtlety. It is our goal. It's not the starting point. That's why we've worked so hard to make our charts as simple and as effective as they are. As Einstein said, make things as simple as possible, not simpler. The reason is, of course, Occam's razor, which is things that are more complicated tend to break more, but you can only make things so simple. If you make them more than that, if you make them too simple, they don't work. Now, you guys get to experience with us every day the accuracy of our charts, those of you who join us each and every day. And as we tell you, if you're not joining us each and every day, you're not going to learn the subtlety of these markets, of these ETFs that you can then apply to your favorite stocks and ETFs. That's why we track these 5 each and every day. Let's look at where we are starting on the half-day chart, as we almost always do with the S&P 500. Up for the day, 0.54%. Went from red to green in the afternoon, still below the 200 EMA. Things are heading up after the successful trade we had last week, 3.32% on SH, which is the single inverse of the S&P 500. That's how we short this ETF. You can also do it with puts. If you're not a Patreon member, please consider becoming one, because guess what you get with that Patreon membership? First thing you get is our 3-part series, Options Made Simple, the Charting Wealth Way. You want to learn about options? I think we've got the most easy to understand, best training that you can have. And of course, it goes out to all of our Patreon members at any of our 3 support levels. And we appreciate those guys for helping fund what we do every day so we can bring all this to you for free. Now, that's where we are on the half-day chart on the S&P 500. 2-day chart, we can see where it went up, then down, and again, we got a green spinning top right now, green on the STC. It's been that way for a while. Still red on the weekly chart. When we switch over to that, green candles, but really a sideways slide, and you can see where that up movement's been getting weaker. So we'll watch, wait and see what's the effect of the election's going to have. Don't know yet. We'll see how that plays out in the future, and that's fine. Remember, we follow trends once they get established. Now let's move on to the NASDAQ 100, see where we are there. Again, we captured that 4.20% down move with PSQ, which is a single inverse of the NASDAQ 100 last week. That worked out quite well. Things then bottomed right around the same area, started moving up for the day, 0.73%. Went from red to green this morning as opposed to in the afternoon like the S&P 500 did. We're still well below the 200 EMA, so we're looking for short moves. Where are we on the 2-day? It was green, went to red for a candle, and now is back to green, but it's really a spinning top, almost a doji, lots of indecision, way below the 200 EMA on that 2-day chart. On the weekly, bouncing off the 200 EMA, again a negative down candle forming for the week, red on the STC. So what are we waiting for? We're waiting to see if things are going to, the green's going to go ahead and clear up through this center band, which it has to in order to reset for us to jump back into a down move. We're just waiting. We're keeping our powder dry, waiting for either or both of these trades on the S&P 500 and the NASDAQ 100 to set up again. You can't push a trade because the market will hammer you. You can't force it. You guys know that. Now, what are we seeing with bonds? Well, bonds are up for the day. We were in the green, that is profit in the down move on TBF, and now as we ended the day, we see that we are breaking even, maybe a little into the red. We're risking 1.43% to hopefully earn 2.85%. We can see where we're in that center area going green. Now, of course, you can pull that trade if you so desire. We penetrated in the morning even. We penetrated the loss band, You can use that as a signal to pull. You can use the fact that we went from red to green. You can, of course, wait and see how things play out and let things play through your profit band. Your loss band there. Again, those are the rules that you set up. Practice trading, keeping your notes, learning how to read these charts, particularly for the individual ETFs and or stocks. Again, when you're adding your own stocks into this, that's the reason we tell you that you need to take your notes when you're in the middle of a trade. You can use your trade worksheets. Those are available. You can modify those as you see fit. You take your notes, you pay attention, and you learn by doing. Each stock, each ETF has its own personality. Those personalities change between the trading zones, between certain times of the year, going into and out of earnings. You learn all those subtleties by, again, practice trading those, paying attention, making your notes, creating your own little trader's almanac, your little trader's diary that will be invaluable to you. You learn by doing. That is where we are on the half day. Now we look where things are on the 2-day, still in the red, still looking good. We look where things are on the weekly, still in the red, looking good, not hitting a lower low yet, but a red down candle forming. So we'll see where things end up going, up for the day 1.09%. That is where we are on bonds. Let's go to gold. Gold booming. 2.31%. Heading up. Now, of course, we've been looking for down trades. Last down trade did not work for us. We pulled that trade. Things popped up strong in gold. Hasn't penetrated the 200 EMA. Is it going to rotate off that and head down? It could. We see that happen plenty of times. It could penetrate it, and gold could keep jamming up. Don't know what it's going to do, but up 2.31%. Amazing. I'm ready to go long in gold, but I'm not going to go long until it penetrates that 200 EMA, resets, and allows me to do it. Also paying attention to where gold is on this 2-day chart. Still well below the 200 EMA, in the green there. And when we look at where we are on the weekly, gold is just now, the wick is penetrating the 200 EMA, which is a good sign, and going from red to green this week in gold, which is nice to see that happening. We'll see if gold is going to move above and penetrate that 200 EMA. Sure is trying to move in the right direction, and that is good to see for all of us. I can't wait to go long in gold. I'm just going to go long at the right time when I'm backed up by the charts. I don't prefer to gamble. I like to take calculated risks based upon what I know has worked in the past. Is it always perfect? Of course not. It's a dynamic market with billions of transactions going on every day, millions of people and decision makers involved. You can't always make the right decision, but you can improve your chances of doing that by doing a number of things. Reducing the threat of volatility by reducing your order size based upon the risk that you're taking. We have great trainings on that. Also, by understanding historically what the stock or ETF has done, and also setting your profit and your loss bands. Again, a 2-to-1 risk to reward ratio allows you to do what? If, again, you're limiting your volatility by reducing the size of your order based upon that volatility, and you'll get all this in the trainings we have on the always winning formula. I'll put that at the end of today's training for you. What you'll understand by taking that is you'll understand that if you follow those rules, you only have to win 4 times out of 10 to be successful. You need to prove that to yourself by practice trading with these methods and seeing how it actually works. So that's where we are when it comes to gold on the half day, 2-day, and weekly. Lastly, we go to Bitcoin. We told you to keep your powder dry on Bitcoin practice trades, and darn, down 13.41%. This is the Bitcoin short-term closed month future, and man, did it get hammered down today. Incredible. Just a hammer down in the morning and then sunk off deep in the afternoon. Look where we are on the 2-day. Of course, we've been hoping that we would hold things somewhere around that, well, you can see it better, around that 1820 mark or so. See it better on the weekly chart, but man, we dropped to a low of 1668. Huh. That is just frightening. Look at where we are on the weekly, and that's where you can see we're somewhere around that 1820 or so mark is where we were hoping to sort of set the floor. Now again, we can see that we touched much lower, but our candles again above that 1820 mark. But again, you can see the trouncing that Bitcoin took. So, whew. The down moves aren't necessarily over yet. Maybe it's still trying to make that floor, and we'll see things recovering at some point. But, it was a tough day for Bitcoin. So again, we will continue to chart this. We'll continue to watch. 24-hour Bitcoin chart shows you that when you look at where the low is on that, it has hit that before. You can see the big down candle here on the week, the 13th of June, hit right around the same area, that 17, let's see where the low is, $17,596. Here, $17,344. So again, right around the same area. So that's good to see. But again, Bitcoin not in the recovery stage yet. We will continue to keep an eye on things. And Patreon members, remember, we will be doing for you tomorrow at the close of the market, the charting cryptos and commodities, where we'll give you a much more in-depth look at Bitcoin and the crypto market. My friends, thank you so much for being with us. We always appreciate you. God bless. All the best from the whole team at Charting Wealth World Headquarters.